welcome to everyone joining us today. My name is Chira, and on behalf of the entire team at the CFO and our partners at LucaNet, we're delighted to have you with us for this leading voice broadcast. As you join, please feel free to use the Q&A function to submit questions for our speakers at any point during the session. In today's business environment, the role of the CFO has never been more critical. The demand for real-time data-driven insight is constant. Yet, for many finance leaders, especially in multi-entity and high-growth companies, a fundamental process stands in the way: financial consolidation. Too often, it's a manual, time-consuming process that relies on a patchwork of spreadsheets and legacy systems. This doesn't just slow down the month-end close, it creates risk, hinders strategic agility, and keeps the finance team anchored in historical reporting. That is the challenge we're here to address today. Our discussion, from complexity to clarity: how CFOs turn consolidation into a competitive edge, over the next hour is to provide a practical framework to move beyond theory and towards tangible solutions for your organization. To guide us, we have two leading experts from LucaNet. I'm very pleased to welcome Patrick Van Galen, Head of Product, and Natalia Ferreira Silva, a specialist sales engineer. They have spent their careers helping finance leaders solve these exact problems. To begin, I'll hand over to them to share a little more about their background, starting with you, Natalia.
Thank you. Thank you, Kira. Thank you, everyone participating in this session today. I'm Natalia. I'm a solution engineer at LucaNet. I work with companies that have multiple entities to help make their financial consolidation and reporting way easier. And basically, I team up with finance people and CFOs to bring simple, smart tools and to take the manual work out of the consolidation, improve accuracy, and help wrap things up faster. So today I'll walk you through, together with my colleague Patrick, how modern solutions can really make a difference. And I will share some real-world examples and tips to help you deal with common challenges and get a clear picture of your figures. Yes, thank you.
Also, warm welcome from my side. My name is Patrick Van Galen. I have a career of more than 30 years, of which about 20 years in different finance functions, and of which 13 years that I'm working with LucaNet, first as an implementation partner, and since 2022 as part of the LucaNet family, in the role of Head of Product Core. Product Core, that entails our consolidation and financial planning product, our lease accounting product, and our to-be-developed month-end close product. So let's kick off with our first topic, being consolidation legacy systems and their risk. Natalia, I think you have a perfect example which can describe those risks.
Yes, for sure. So I want to bring a scenario. And this scenario consists of a UK manufacturing group with 18 subsidiaries. And this group discovered a 2.3 million consolidation error just 3 days before their earnings announcement. So what's the issue? What was the issue? The single broken Excel formula in their intercompany elimination schedule had gone completely undetected for 6 months. Their spreadsheet-based process obviously lacked version control and was heavily manual, causing error to cascade across multiple workbooks. And as a result, they had to delay earnings, redo past reports. They lost investor trust, and they ended up paying twice as much for audits. So this was the wake-up call. Yeah. They've since moved to an automated platform. So yes, this is the scenario.
Yeah, thanks, Natalia. As being explained via your example, there are risks that must be addressed and hidden costs that can add up. If you look at the risks, I think they're threefold. You have an accuracy risk, a regulatory risk, and an operational risk. Looking at the accuracy risk, and that's a little bit a personal opinion, I think that we all know that spreadsheets will break. They will break at a certain scale, which is typically around 10 to 15 plus entities. So if you have more entities, I would advise you not to do it anymore via spreadsheets in order to avoid running into troubles. The breaking of those spreadsheets, and that's also given in your example, can lead to manual errors, which at the end of the day will lead to misstatements and, of course, will lead to loss of investor confidence. And that's the nightmare, I would say, of a CFO, losing confidence from lost confidence from the investors.
Yes.
And thirdly, of
Absolutely.
course, also typically versioning. We all know a lot of files with version 1, 2, 3, 4, 5. Sometimes the final version, then final adjustments come. Where do I need to add them? And as given in your example, this can lead to sometimes millions of pounds difference in your actual statements as they should have been. So that's accuracy risk, which is an important one in my opinion, but also regulatory risk, and especially post-Brexit reporting and evolving IFRS standards requires fast adaptation, which in most legacy systems and especially also in spreadsheets is almost impossible or comes with a lot of work, meaning missing deadlines and so on and so forth. On top of that, legacy tools, and we at LookAnet, we are not supposed to be a legacy tool. Legacy tools can't keep up which lead to compliance gaps. We in LookAnet have out-of-the-box business logic, which is maintained by a team of specialists. We have our IFRS specialists, US GAAP specialists, and they're looking at the regulations and making sure that our business logic is always up to date. Having said that, there's also an operational risk involved, meaning that with spreadsheets, your year-end close is really also depending from key individuals that know their spreadsheets. If one of the key individuals is not there anymore due to certain reasons, then someone else needs to take over a spreadsheet. And we all know spreadsheet being made by someone else is not easy to take over, which can lead again to missed deadlines. And then, of course, there I would like to stop with is audit reports that come with qualifications due to the lack of documented controls. Typically, people are entering sums in cells and not and they're not. How would I say? You can control them anymore. You don't have a clue about what it is. On top of that, we also have hidden costs that might add up. Ongoing IT maintenance, especially with legacy projects and IRP integration challenges. And give an example, suppose that your IRP is on-prem and it changes to a SaaS environment, you have to redo your integrations again. Actually, to sum up, the solution is to move to a modern consolidation platform that offers automation and building controls, I think, and also audit-ready transparency.
Yes.
So
Yes, absolutely. So we can shift
from that
the,
fighting into driving strategy.
yes, we can shift this view. That was great. I would like to touch base on something now, which is the real-time consolidation theme coming from this this idea that when we do that manually, of course, we won't have the real-time information on the go, and the multi-entity management. So let's dive deeper into that.
Yeah.
Yeah.
Well, what I
So
propose maybe is
you
that
would
I
like to,
have a quick view on what we at LookAnet can offer there.
yes.
Yeah, we have a CFO solutions platform, which almost brings for every job to be done in the office of the CFO an easy and quickly, and that's also important, quickly to implement solution. From operational planning over consolidation into disclosure management, even XBRL tagging, we're offering you a solution. And on top of that, and that's one of our main USPs, we have 300 off-the-shelf ETL scripts, meaning that we can integrate your data almost via it's not a lot of customization to be done. And having said that, we're also, it's easy, as our consolidation is very easy, touch of the button, because we have business logic being built in, and also supporting different currencies. I think in an environment, especially in the UK, you easily will have to do with euros, US dollars, British pounds, and then it's of course very nice to know that it's being translated all the way. So maybe Natalia, you can give some examples of how the added value we can bring with some real examples, maybe.
Yes, absolutely. So let's think about an UK private equity backed up
Mhm.
group. They possibly run quarterly M&A evaluations and integrations using real-time consolidation. They absolutely can support fast growth and full control, as opposed to, again, firefighting and running across the results in a rush, or yeah, without any control on time precisely. So yes, another example we can bring up is like if you have like a UK parent with a US gap subsidiary. That's a very common case scenario. Um, we need to convert some yes reports and results, and maybe even make adjustments to
Mhm.
balance these gaps. So we can see that instantly in LookAnet with the elimination steps fully documented. So this again is a very high benefit for auditing purposes as well.
Yeah, I think I can also shed some light on it, especially with the multi-cap and cross-currency environments. That's really our bread and butter. And what do I mean by that? We Everything in LookAnet is being journalized, like almost in an accounting software. So if you will import your data from a US GAAP environment or from an IFRS environment, it's first of all translated in the, let's say that it's a British company in British pounds, so the US dollars will be translated into British pounds, the euros will be translated into British pounds, and those foreign exchange currencies is something you can maintain yourself, or you can even import them from external sources. Of course, your balance sheet is being translated at month end, and your P&L at average currency rates, being the monthly average, but sometimes you have to have a year-to-date currency. I can assure you doing that in an Excel file is almost impossible, especially with the year-to-date average currency exchange rate, because then you have to restate your prior months in the current month, see the currency effect, and so on and so forth. Telling you about currency effects, this is typically something that you need to disclose in IFRS. What do I mean by that? That certain balance sheet items you have to tell to the stakeholders what the currency effect is. And LookAnet brings you there quite a nice solution. Why? Because all currency effects on every single account is being maintained in a separate flow. So you almost can automate it into your reports to have your currency effects. Another thing is M&A scenarios. What typically we can do, since we are very flexible in terms of adding new companies into our tool and also importing it via Excels, we can create a consolidation environment where the target is already being part of, and you're importing that data and you immediately see effects. Meaning that if you compare your old consolidation with the new consolidation with the new group of companies, you immediately see what effect it has on your balance sheet, on your P&L as well. So that's something we can easily do, meaning that it at the end of the day will result into what is it called again? I always forget the nice word, into a continuous, that is not continuous closing, but it's more like a real-time consolidation. And
Yeah.
this all, and they were speaking about days, whereas in a spreadsheet, it's typically 3-4 days before your consolidation is ready. If you prepare your local monthly closes very well, it's actually
Mhm.
a touch of the button. It's a matter of reviewing the data that comes in and then running the consolidation in an automated way.
And we don't see actually how powerful this can be, because when we think about this consolidation and all
Mhm.
the features on bringing up, yes, only the statutory requirements or compliance requirements regarding IFRS or different gaps, we think more about compliance, but this can go beyond that. We can really
Absolutely.
give CFOs the edge, strategic tools to grow faster, smarter, and for investors also, and for planning of scalability and so on, with all this seamless integration and of data. So currency
Yeah.
data, yes, company, yes, plug into the whole consolidation in minutes, or yes, not even bringing like a yes amount of work,
Yeah.
significant amount of work on this.
To,
So
to
yes,
wrap it, yeah, actually to wrap it up, it goes beyond compliance, as you were saying. Also, your
exactly.
management consolidation can be done, and then it becomes steering information, because consolidation is not only about the semi-annual one and the annual one, but also it's a monthly process. And their speed, I think, is very important in order to have your steering information at your fingertips. And that will lead us actually in the third topic we would like to tell. It's fast close and in investor confidence. As I already mentioned, introducing the former topic, automation is one of our ESPs, meaning to enable actually our customers to speed up their consolidation process. And then, of course, there is also AI. With AI, with our AI Copilot, we can do analysis. We don't do it. AI does it for us. It analyzes. It gives you an analysis for you, which is based not only on your financial data but also on operational data. Why?
Mhm.
Because we also providing you with a data lake house where you will have your actual data, but also your looking forward data and at transactional level. And this is really one of the key strengths of AI, to use that data to see certain patterns, to analyze, and to tell you even the story. It will not tell you there's a difference of X%, but it will explain you as to why you will have that difference. And of course, Natalia, you can bring that in from your day-to-day experience and elaborate a little bit on what could that mean, because for me, it's all about investor confidence as well.
Yes, absolutely. With all these yes possibilities, the confidence is boosted, of course. So we
Mhm.
can assume we will have predictable close times. And a strong operational control to investors. This is essential for UK mid-market firms that are seeking, for example, funding or preparing for an IPO. So investors view fast close as a proxy for management capability, and also faster reporting, more timely guidance, and higher valuation multiples, let's say. So
Yeah,
one example I can give, one UK company improved their valuation by 10 to 15% after demonstrating consolidation excellence. So again, coming back to the conclusion we commented before, not only about compliance, but much more than that.
yeah.
Um,
Yeah,
Yeah.
yeah,
So.
yeah. I think also I used to be in my former life also in M&A projects, and valuation is not only about the figures; it's also about how you are organized. It's not you do a due diligence on your financial figures, but also you do an operational due diligence. You do a sales due diligence. There are more due diligence to be done, which also can add to your valuation or avoid that your valuation will be lower than it should be. Uh,
Mhm.
of course, fast close also means that you need those tools in place. You cannot do fast close without tools, and if you can cut off in your close due to the fact that your consolidation is being done by almost a touch of a button, and you have good data integration, meaning remember our USP of the 300 off-the-shelf ETL tools,
Mhm.
you will have your data almost at your fingertips. And you don't have to wait until the last moment. You can already import your data and say, like, if you cut up your month-end close process into certain stages where you say, like, on work day 2, my top line is already being ready. You can import the data and start doing the analysis, or even have AI start doing your analysis for you. You can already import during the close into looking at all the data and see run rates. Pretty easy, because by our ad hoc reporting on your screen, it's just a
Mhm.
matter of drop down boxes, and it is shown there, and easily you can change columns, you can change rows, and it helps you investigating run rates to make sure that your data becomes more accurate, meaning that you don't have to wait until the month end, the real month end, the real final situation of the figures, so that a business controller or business controller can already start before the final figures, and help actually improve the quality of your closing process, hence also improving your consolidation.
Yes. Absolutely. Yeah, and coming back to the connectors, also, we provide a single source of truth, because
Mhm.
connectors are there. So even though I'm creating an ad hoc report, as you mentioned, or any other, yes, analysis that is not a statutory analysis, I'm not in risk of changing any data from the sources from the group of or companies that are in the group. This is safeguarded in LookAnet, so it's a massive advantage.
And at transactional level,
Yes.
meaning that you drill through from your ad hoc report on screen until the transactional layer, and you really can see what transactions are composing your balances, or your balances, or your amounts on your P&L.
Hmm.
Meaning, and that's I'm already used to it for more than 10 years, and for me it's nothing special anymore. But doing implementations and seeing already after 2 days, due to the fact that we have those off the shelf ETL scripts, after 2 days you already see results. That's
Hmm.
really the aha moment during the implementation, like people that are sitting there in your implementation, and they suddenly recognize their numbers, and even
Hmm.
if you drill through, they see the transactions and they say, okay, I remember this transaction was something which was not according to the run rate, but which we explained, and so you really get a lot of confidence of the
Hmm.
finance people that are being involved in your implementation, and that makes our work, of course, also very satisfactory, to be honest.
Yes, it's quite rewarding,
Yeah,
right?
absolutely,
Yeah.
absolutely.
And once you see that, you cannot unsee that. So once you are used to it, it becomes so, yes, practical and simple,
Mhm.
and you see the value in a daily basis. So yes, it's something that is quite unique.
Yeah,
Uh,
and actually, to wrap it up, I think it's all about, as you were mentioning, the single version of the truth. residing
Mm-hmm.
at a transactional level at our data lakehouse, being summarized in our consolidation. And yeah, also, I don't like to call it just a consolidation tool. For me, it's also a reporting tool, because also you can get different views on your data, and also you absolutely can use it for management purposes and management needs. So having said that, single version of the truth, the fact that we have out of the box business logic
Mm-hmm.
means also that you can do a quick consolidation, meaning that you are most probably ready with your strategical insights a little bit faster than your competitors, which gives you absolutely a competitive advantage. And also, it gives you more investor trust, and that's also something really important. As I was telling you, as I was telling in the introduction, losing the investor trust of the investor is really the nightmare of the CFO. That keeps the CFO awake at night, and
Yeah.
being able to explain anymore the figures. Can you imagine that? I would sweat. Uh,
Nightmare. Yeah. It gives nightmares, even though it's not,
Absolutely.
it never happens, but it can give you nightmares, yes, of anxiety. And
Yes.
yes, so um, another topic that we would like to bring is the compliance. So yes, we cater, of course, for the compliance,
Mhm.
and we know the advantages beyond compliance, but we treat compliance very strongly
Mhm.
in Lucanet.
Yeah.
Um, it's with the audit readiness. So we can maybe focus on the UK, again, UK subsidiaries,
Mhm.
or with US parent or yeah, parents or subsidiaries.
Mhm.
This is very common as an example, because I come across that, yes, very usually it's the case. So we have SOX, we have the intercompany eliminations, and we have the audit costs. So
Yeah.
what we can do about that, basically, we can provide one very, very important thing, which is the traceability.
Mhm.
The traceability will lower the audit costs and will give you much fewer headaches and nightmares, as we were
Yeah.
talking about. Um, the full audit trails that we provide can reduce the external audit time and fees, and this is typically done in 20 to 30%. So if you think about treating that in a spreadsheet and having to show evidence and explain everything that is happening there,
Yeah.
compared to the automation we can provide with the automated journals and comments and so on. You can really see that we don't even need to bring the numbers. You can even imagine the advantages of that.
I
Um,
think
yeah,
that's
so
an important thing. I can give an example on that. Everything in LookAnet is journalized. What do I mean by that? It's almost like an accounting tool. You can drill to the journal, you can give explanations in a journal, you can show them in different columns. And now I'm maybe a little bit too technical because it's our own vocabulary where I'm using now, but we have adjustment levels. What do I mean by that? See it as journals in your accounting software, which brings certain types of adjustments together. Gap adjustments, intercompany elimination, equity elimination, dividend elimination. You can go as many as journals, you can create as many as journals as you like, meaning that you can show them in columns, which gives you, for the auditor, what they typically do is they check the local annual accounts with what comes into LookAnet, and then they need to make a bridge to the consolidated accounts. And in between, there are a lot of eliminations which are
yeah.
there. And due to the fact that we can show that to them, we can export them to them in an Excel, all the journals that are in between, and they just can do their audit, do their sampling, or do a complete audit. It depends from environment to environment, and go through it, which gives, of course, a lot of confidence to auditors as well. That's one thing. Secondly, it also says it's almost Big Brother's watching you. Some people are getting scared now, like Big Brother. I don't like Big Brother being watching me, but having that in a system is quite nice, due to the fact that. Sorry, I was distracted a bit. Teams keeps on bugging me, but that you have really can see who entered a journal, give an explanation to that. It goes even so far that every element in LookAnet has an audit trail. What do I mean by that? If you say car expenses and you change the naming of car expenses to automobile expenses, you can right click on that account and you can really see like the complete history of that account. Who did what, whether it has changed from an item to another, stuff like that. So I think we are really supporting everything with respect to compliance, to audit readiness. We're also SOX compliant, although our activities in the US aren't that big, but it might be that a UK company is under a hedge fund or under a private equity fund, which needs to report according to US GAAP. Well, you will be ready. You will be ready for it, and it's even SOX compliant. I think that's important and nice to know.
We have a question, Patrick. Just yes, to before moving forwards. So, what is the best way to get a finance team to embrace a new consolidation system when there are experts in the old manual process? So that's
it's entailed in the question. It's about change management, of course, and change management will mean that you have to communicate in a good way. That you have to convince is not the nice word, but that you have to show them the advantages of a new system, and that's exactly why we are implementing in a certain way. It is training and implementation at the same time, meaning we are not preparing something and setting up a complete environment or tool and then say, now we are going to give you a training. No, we are doing that together with the people that will do the consolidation. And that would mean that the aha moment, which I was talking about a few minutes ago, figures coming in, they are very recognizable. And then really, and it's already after a few days, you really get the people with you. And that's a little bit different compared to our competitors, which are having a huge implementation phase with a lot of consultants there, listening to you, then replicating it into a environment or database, and then starting from there, and then train the people. But for me, it's more important that you co-work together with them during the implementation, and that's, in my opinion, the best way to convince them of the system. And be part of me as a consultant. I was also always also part of doing the reconciliation from their spreadsheets into LookAnet together with them, so that they don't feel left alone. And that's the best way to learn the system, actually.
Yes, absolutely. The change management for me in this case is all about training and passing confidence on the new process, new system, new solution. We know that finance teams are, yes, known to be quite conservative and resistant sometimes. So we do know that, and that's why our implementation process is quite unique, is dynamic. We work very much alongside the team to provide all the confidence before, yes, and even after the go live.
Yeah.
We can maybe move forward. Let's
now we have a little bit of multi-currency stuff.
Yes, we can dive into that. Oh, sorry. Another question came up. So on integrating systems, how do modern tools handle consolidation when your subsidiaries all use a different and messy mix of ERP systems?
What is the answer, Natalia, you think? What I'm going to
Hmm.
It's the 300 of the shelf ETL scripts we're having. That's one thing.
Precisely.
Second, if one is missing, then always we can do intermediate Excel imports
Hmm.
to quickly launch and to make sure that you are importing your data and that you don't have to wait until your ETL tool is ready. What we
Yes.
are doing is when we come across a system that is not readily available, then we create it for you, and
Hmm.
then we will have the 301 ETL tool generalized. And that's how we actually have been building up that amount of ETL tools. We do it, we're waiting for a client that has some system which is not very well known, and then we're creating the ETL and make it also a general one, which we
Yes,
will then make available to all our
indeed.
clients. Yeah.
We are quite experienced in developing as well new
Yeah.
connections. But the important thing is to, no matter how your data and where your data is coming from, we can bring into the consolidation group in LucaNet, either via the good old Excel or via connectors, yeah, the
Yeah.
over 300 connectors and so on. So yeah,
Yeah,
we
I
can
see also
guarantee that.
another interesting question is on scaling risk. What is a specific tipping point? And I think I already told that in the introduction. 10 to 15 entities can be a tipping point, but also in most cases, what is the real tipping point is multi-currency
Hmm.
and having to translate, and especially when you're in a legislation where you need to translate your P&L on a year to date with a year to date foreign exchange, average foreign exchange currency, because that would mean that you need to wait up until the end of the year to have complete year to date. And doing that in a spreadsheet, if you do more consolidations during the year, to build that up means that you have to restate always the first quarter in the second quarter because you have a new average exchange rate, which
Hmm.
becomes a nightmare for intercompany eliminations because it's almost impossible to keep that. So
Yes.
that for me is really it's not only about the amount of entities, but also the complexity of your business, multi-currency, multi-cap. Um,
Yes.
but
And
typically,
also,
yeah,
touching on that also, even though you don't have a multi-currency situation as of yet, you can still have issues with the intercompany transactions. So the intercompany transaction can also be considered a tipping point, if you
yeah,
like,
yeah, the
because
amount of intercompany transactions, I think that
exactly.
yeah,
So we can think about all of these as like yes, something to yes consider, especially looking at scenarios where you are yes foreseeing M&A or like yes scalability and so on. So let's not wait. Basically, yeah.
yeah. And the other thing which I can advise is you're with those Excel spreadsheets, and there's also a tilting point. You're always running in the risk of suppose that you do it the first quarter and then you do the second quarter. And there's someone in the organization who has changed his figures of the first quarter.
Hmm.
How you gonna keep track of it in an Excel sheet? What you typically then do is year to date, but you don't even know whether whether it was a movement of before or after, and
No.
it creates chaos. It creates chaos.
Yes.
Yeah.
Now, another question, does elimination of unrealized revenue adjustment for inventory happen automatically or manually in a journal? Can you tell me more about different types of consolidation adjustments, explaining which one are automatic and whose and which one is a manual one? Mhm.
I think if I take the example which is given, inventory eliminations of intercompany can be done automatically, but it's always if the data is being made available. That would mean that I need to know from the accounts which portion of your inventory has been bought intercompany and is still in your inventory. So you need to have somehow a dimension into your ERP system that keeps track of that. If you have that, we can automate it. And how just by eliminating it based upon a partner code that is on your inventory line. If you do it then right, you also need to know the the gross margin that you're making on top of it, because that's what you typically need to eliminate. And a gross margin, you can do it, and I'm always that's here I'm again. You can do it exactly wrong, meaning that you do it per SKU on the real margin, or if you do it, you can do it approximately right with an average margin. I
Mhm.
prefer the average, right, because it goes faster, and at the end of the day, it's to give you information that you can use to steer. So, what elimination do we have? Intercompany eliminations, the normal one, balance sheet, P&L, profit in assets, as how we call it, so profit in inventory, but it can also be that you have in other assets profit, which you would like to eliminate. Then intercompany of P&L transactions, dividend eliminations, and then the typical equity elimination. What do I mean by that? With a calculation of goodwill. What we don't have yet is an automated purchase price allocation, meaning that you need to post your purchase price allocation before doing the elimination in order to have a correct goodwill calculate, an automatic correct goodwill calculation and posting into our system. So
Mhm.
those are mainly the intercompany eliminations that we provide for with out-of-the-box business.
Mhm. Yes. Yes, just to complement, we can
Yeah,
always create new topics for adjustment. So, okay, we have the automation for intercompany, but I need to make an adjustment for a different gap because I acquired a company in China. So we
yeah,
can always create new adjustment levels or topics of adjustments in the
yeah,
system. That's very simple with a few clicks. Yeah.
yeah. And we're having an app that's also interesting. If I can trigger something, a transaction that comes in with a certain trigger, I can eliminate it and say, like, you need to transfer it out and put it somewhere else. To give an example, what we typically do in US GAAP, you do a kind of, and now we're going very technically and very far, but maybe interesting. In US GAAP, what you typically do is you do a kind of, you're reevaluating always your shares. It's also the same in Holland, meaning that you're posting the results of the subsidiary on your shares. In IFRS or in UK GAAP, it's not allowed. So that posting, if you can
Mhm.
trigger it, I can eliminate it out automatically. And we have a flexible app that can, the user himself can create those triggering events and can tell, okay, when the system picks that up, what it needs to do with it, where it needs to reverse it out. So we have a lot of out of the out of the box business logic, but also the
Mhm.
flexibility for users to create their own business logic on top of that.
Great.
Hoping that it answers that elimination question.
Yeah.
You have to be careful with our time, I think.
Yeah. Okay. Another question. Oh my God. After go live, what's the first real benefit? What's the first real benefit the team feels? The measurable time saved or the confidence from knowing the numbers right?
That's a very good question, and I would say it's depending from environment of to environment. Um,
Mhm.
Digging a little bit in my own experiences of doing implementations in my past, It is actually it's the confidence in the figures. Why? Because they can drill through. They can drill through to the transactions. They can analyze themselves. That was prior AI time, of course. They can drill through to it, and they see what is there is actually what should be there. That's one thing. Of course, more time to analyze due to the fact that they don't have to do a lot of number crunching. It's a matter of importing your data, reviewing data, and running the consolidation in order to have your consolidated figures. And uh, that process, typically what we cut off in closing is 2 to 3 business days, which is, it might not seem a lot, but it is a lot.
Yes.
If you can reduce from 15 to 12 or to 10, it's working days. It's not weekdays. So it's almost a reduction of a week.
Yes, and we all know how time can be valuable, especially in this context. So it
And,
is
and being in
very
product,
relevant.
that's something I can also tell you. Being in product, one of the things I'm looking into is continuous closing. What do I mean by
Mhm.
that? Due to the fact that we're now in an AI era, we easily can have AI crawl through your data on a daily basis. Overnight,
Mhm.
we can import the transactions into our data lake house, and we can show in a dashboard anomalies, strange things that are happening. Suddenly I see a transaction coming in which is not according to the past being considered as normal, and then it pops up and you need to do something. You need to explain it, or maybe it is a real error and you can go back, meaning that
Mhm.
at every, how would I say, at every stage of your month, you will have accurate data, meaning that you, in theory, could continuously close. You can daily close almost, and that's a little bit
Absolutely.
the vision I'm having, so that you try to bring as much of your closing, typical closing entries already, that you avoid them, that you already do them during the month, so that
Mhm.
you're cutting off closing. Also, the local closes can be much shorter due to that.
Yes. Yes, you are free to use basically the data available now at any point, or
Yep.
basically, yes, whenever is needed.
And
Let's just touch point a little bit on the implementation because
yeah,
um,
yeah,
yes, we will conclude soon, but the last topic here, I think it's very relevant to, yes, just inform a little bit about implementation and the
yeah,
platform selection. So yes, if you would like to talk a little bit,
yeah,
yeah, introduce this topic,
yeah.
Patrick.
I will do that. Yeah. So if you choose for our consolidation tool, and I already elaborated a little bit on that,
Mm-hmm.
we we offer you a tool that is really tailor made for the mid market. Why for the mid market? Quick implementations. It's not about months or years. 6 weeks to 3 months is our implementation phase. That would mean that after 6 months, you're ready. If you already did a consolidation in the past in an Excel and we have to reconcile, then it goes more into the direction of the 3 months, because replicating Excels, even Excels with errors, is sometimes cumbersome. But it has to do with the Excels, not with our tool. We have a tool where you can easily maintain your group structure, as I was talking about during with the example of, if you are in an M&A trajectory and you would like to have your target already embedded into our
Mm-hmm.
system, you can easily maintain group structures in Lucanet. And you can also show it in a nice organizational chart. We also give the possibility to scale your product. Why? We're delivering not a consolidation tool, we're delivering a platform of solutions with a data lake on top, which enables drill through. And of course, we go from record to report to the final end, even the publication of your statements, because we are an XBRL tagger tool, which sits
Mm-hmm.
on top of our disclosure management. So it's really the complete journey from your record to report, which we can give a
Mhm.
solution for.
Yes, the platform, let's say we can extend this yes topic on
Mhm.
consolidation. The platform extends that into the CFO yes office. So basically we can not only deal with consolidation and all these topics that we brought up here, but there's so much more that yes is included in all these like strategic work that the CFO has. One of them, for example, as Patrick mentioned, the disclosure management. So preparing the reports, gathering data into a specific layout to disclose that and to publish that. We thought about that, and we can offer a solution for that, which has, of course, a seamless integration with the consolidation information and data.
Yeah,
We can also bring up the lease accounting
exactly.
figures straight into the consolidation. We have also another solution that deals with the lease accounting for IFRS 16
Yeah.
requirements, which are now becoming more and more in demand because of the requirements, compliance
Yeah.
requirements. So we thought about that.
And
Um,
interesting to know, and lease accounting, we did last week in hackathon. What is a hackathon? Where all our developers are coming together in a room and are developing something. And actually, in those 3 days, we developed a scanning tool, meaning that you scan your contracts, your lease contracts, and it immediately translates it into the components that are needed in our lease accounting to calculate the lease account adjustments.
mhm.
And I've decided to release it before the end of the year, which is a sneak preview here but I can tell you that. So at the end of the year, it will be released, meaning
Mhm.
to make our lease accounting tool even more compelling, because you don't need to do, because that's always a nightmare, having to, especially with lease contracts of buildings. These are
Yes.
sometimes booklets, and if you have to read it through, it will take you half a day. And translating that into components into your system by keying them in takes you also an hour more, which will now be done in actually in minutes, which is really mind blowing.
It
That's
is. I love it. I
yeah,
love it. So they are all like yeah, we have great things coming up in the whole roadmap of all the solutions. Patrick knows much more about that, and yeah, if we had time, we could speak much more about that.
yeah. I could fill
Um,
hours and hours.
yes, hours and hours. Yes, it's very exciting. We also haven't even touched on planning and
Yeah,
how we can help you with not only finance but other areas in the business together, bring together this
yeah,
whole data into the extended planning and analysis. But anyway, we need to come to an end. So
yeah.
we are past time probably. So please, if you could come back, Kira.
Yeah.
Patrick, Natalia, thank you very much for such an insightful and practical session.
Mhm.
The key takeaways for our audience today are incredibly powerful. I believe 2 points in particular stand out. First, the idea that speed and quality of the financial close is a direct signal of stability to the board and investors, and this is a crucial strategic point for every CFO.
Mhm.
Second, the framework you provided for using a unified consolidation process to enable agile M&A analysis really brings the concept of competitive edge to life. So thank you again for that clarity. And I also want to extend a sincere thank you to our partners at LookAnet for their expertise and for making this important broadcast possible. And of course, a huge thank you to our audience of finance leaders. Your time is valuable, and we appreciate you spending it with us today and contributing with your great questions. We will be sending a TLDR based on this to all registrants, so you can revisit these concepts and share them with your team. For those of you who recognized your own organization's challenges in today's discussion and are ready to take the next step towards clarity and control, we strongly encourage you to explore the resources available on the CFO website to see how these principles can be applied. On behalf of everyone at the CFO, thank you for joining us. We wish you a productive rest of your day. Thank you.
Can I say a last word? If there are people in the room that are willing to contact us in terms of having a chat about certain things, and it doesn't need to be a chat about looking at, but really about consolidation and processes and financing, I'm very happy to do so. So you can share my contact details with anyone in this room, and I'm very happy to answer those questions and or even to have a little chat with some of the people.
Thank you for that, Patrick. Thank you.
Okay.
Yeah. Thank you, everyone.
Okay,
Thank you so
thank you.
much.
Bye bye.
Thank you. Thank you.